Okay, let's go ahead and invoice our customers now that we've entered all the time cards and we have all the information for the time our employees work, the billable hours, right? So now we can go ahead and start billing our customers. So we're gonna go customers, create invoices. All right, so here it is, our invoice from DeCre Accountancy Group to DeCre Properties LLC. Right, so here we get to pick template. Typically, time and expense is the easiest. You know, attorney probably would do too, and that's fine. So again, our customer job. So that's Abe 1002. So it should be that one. Select outstanding billable. All right. So that's where it should be easy, right? So technically, these are all the billable hours. If we did our job correctly, they should be these, right? So Abe 10,002, Abe 10,002, that's what this is. And then we just have the time, so technically we should be able to select all of them, right? And it should work. So let's give it a shot, because we only have January entered. Alright, so we have $4,541.25, 4,540, yes, works, awesome, right? Perfect, so here we are, we're creating this invoice. Now, what happens? What happens when we're creating this invoice? At this point, we will actually have accounts payable impacted. So what will happen? So one thing for sure, right? I mean, accounts receivable, my apologies. Accounts receivable is impacted. Accounts receivable is an asset, and at this point, it will go up. So once we book it and we can test it, and I'll do that for you, it will go up by $4,541.25, right? So, and we know that again, accounts receivable is an asset. Assets go up when debited. So once we click it, right, it will go up. What else will go up? Well, the other things that will go up, that will be actually our income accounts, our revenue, our accounting service, bookkeeping services, depending on how it was linked. So here we have bookkeeping, we have payroll income. So let me just look it up. So our bookkeeping services income is 41600. Right, and then our payroll services is 4680. So we have payroll and we have payroll tags. Payroll services. Let's see. I don't see it here. Well, we'll look it up in a second. But we know that these are the revenue accounts and they will go up. So, okay, let's go ahead and click OK. Right, here it is. Now, you don't see actually debits and credits on this right now. And here it says email later. No, we're gonna send them, we're gonna print it. But I want to show you. So here it is. Oops, let's go ahead and make sure the date is correct. Doing it retroactively, and this will be our invoice number. Again, we could go with the QuickBooks sequence, but in this case, again, we can actually go ahead and do that. All right, so here it is, net 10, terms net 10. All right, here it is. Now, let's take a look at this transaction detail report. It's actually one of my favorite reports, as some of you might already know. And the date on this is, and I want to do it now because we haven't done any transactions yet on this, right? So you see this thing is empty, right? So let's go ahead and book it and see how it impacts and what it impacts. So save and close. You've changed these terms, yes. All right, oops. You see that? Yes. So just like I told you, right? Accounts receivable goes up, and then we have this distribution by account 41,600, right? 46,800, and that's it really. So we can go ahead and just again sum them up just to show you the summation, the logic behind it. Let's see. And the rest, by definition, right, should be so if this is our bookkeeping, the rest should be payroll. But you know, let's double check, make sure that we didn't mess it up. Yes. All right, cool. So we came in and it added correctly. So let's go ahead and just for a second again into our customer, create invoices, right? And let's take a look at this previous invoice that marked past due because again we kind of do it retroactively. But again, before we get into essentially booking these items, let's just take a quick look again what's being impacted. And again, you can see that our this amount right here was a debit to account 11,000 accounts receivables, right? And accounts receivable as an asset went up, and then the distribution, right, of these accounts depending on to what type of income it was, right, was a credit to the corresponding income account. Again, we could have simplified and just have it all as one type of income, and in future simulations and simpler ones, we could do that. But in this one, again, it allocates it. That's the beauty of having the time cards and having different labor activity codes that you actually can track different types of income, right? And that's how again your debits and credits are impacted. But what's important is that again 41 600 and 46 800 right here, right? 41 bookkeeping services right here, and then payroll services income. We know they're both revenue accounts, and revenue goes up when credited. So here they are, right? Again, we already saved this. It's picked it right here, right? So we can go ahead and move forward with billing the rest of our clients. So let's go ahead and take a quick look. So here we are. We can select all three and we add the total we have here, right? Perfect. Okay, we can go and say okay. Again, what we have here, right, is that we have our payroll tags work and payroll tags. Let's see, let me cheat a little bit. Payroll is 46800, 46800 right here. So what we have is our accounts receivables going up, and our, if you remember, 46, and here we can cheat it right here, 46 800 payroll services income, 46 800 payroll services income. That's a revenue account, and revenues go up when credited, right? So right here, once we click save and new, right, we will have essentially the bill created, the invoice created that will, you know, debit our accounts receivable 11,000 by 5,070 and credit we take the phone out 46,800. So again, this amount right here is a debit to account 11,000, and it is a credit. Well, the distribution of this technically, because this drives that distribution, is a credit to account 46,800. All right, saving new. check this. Yeah, because QuickBooks loves emailing those invoices, which is, I guess, a good option, but we're not going to do it in this case. So we assume it's already printed. So save and close, save and new. All right, and again, we can go and take a look and see here. Here is the ledger to show you the impact on debits and credits, right? That's what I wanted to show you with this. So you can see that the two accounts that got impacted, right? 11,000 and 46,800, they're right here. And that's the impact we observed here, right? Perfect. So let's go ahead and see our next one. Okay, let's go ahead and continue with billing. Next one. Later, net 10. Let's make sure that we use the invoice number we want. Again, if it's auto-generated in QuickBooks, obviously, we would use what QuickBooks has for us. So nothing shows up. In that case, you just say add item cost. They show up. See everything here we have is January. Select all 7,681.25. Yep, that matches. Okay. Let's just finish all of them, right? And then, since we undo this, we'll know the debits and credits behind it. But again, I'm going to show you right now. So what do we have? We have sales and use tax, right? That goes into our income, accounting services income, bookkeeping. What's going on with bookkeeping? That's our bookkeeping services income. What else we have there? We have payroll. That's our payroll services income along with tax. And that's it really. So what we do is we'll take these amounts, right, and we'll allocate them to those types of income. It seems like it's complex. It's not. I mean, we could have kept it simple and we could have said, income, one account, and we or revenue, and we would book everything there. But let's go ahead and do it. So again, what's happening? We haven't received any of this money yet. Very important part. So for cash basis taxpayers would not pay taxes on this yet because again we don't have the money to pay taxes on it. But nevertheless, in QuickBooks right now, as I already demonstrated, and I'll be going a little bit faster. We have quite a few of those to process. Accounts receivable goes up. Accounts receivable is an asset. For assets to go up, they have to be debited. So here it is, $7,681.25, right? What else is happening? Well, like I already said, right? We have a number of items that basically, we have to allocate here. And those are, like I said, sales and use tax. Work on that. That goes under our accounting services income, right? 41,000, account 41,000. So let's put that in there, $731.25, right? It's a revenue account. Revenue go up when credited, right? All right, what else we have? Next few are bookkeeping. That's our bookkeeping income. Bookkeeping income is 41,600. We can go ahead and add all of those in there. That's 4750 plus 285 plus 650. All right, so for this one, next one we have payroll. That would go under our payroll services income. Again, those we keep together, so that would be our 475 plus 2340. All right, then we have another bookkeeping. All right, again, I just want to demonstrate the process and then we can do it a little bit faster to demonstrate that it's, when you do it automated, you don't have to do through this, so it goes a little bit faster. But this way you understand the debits and credits behind the interfaces. And if you practice this simulation, you'll get the sense for the volume. Anyway, back to so what did we book? We booked our payroll. Now we have bookkeeping, 33250. Right, you see how I'm doing it? All right, then we have payroll, three more payroll. Oh, well, let's add the bookkeeping. All right, there's that. 33250. Right, I'm just showing the math on this. And then we have one more payroll. Again, I could have done them all together for simplicity, it doesn't matter. Again, for 600. So again, as long as it balances. So 1950 plus 451.5547.50. Duh, it balances, right? If you followed along what I did, I allocated these amounts here to this credit. Each one of these amounts here essentially drives up, but this is the distribution to these revenue accounts. And revenue accounts go up when credited, right? So all of these amounts, they're credits to revenue accounts, to these various revenue accounts. And these accounts are, our accounting services income, our bookkeeping services income, and our payroll services income. All right, so again, we could consolidate it further, but again, no reason to. So here it is. All right, good to go. Save and close, or save and new, right? Currency, yes. All right, so let's maybe pick up a little bit pace here so that you get a sense for it now that you know how it's going. All right, so again, here it is. Select all, just, oops. Right, matches 2,340. Okay. We're not going to email it later. I'm just going to highlight, debits and credits here. All right, so again, let me just close this out. Since I'm going to do distribution, right? But basically, we're, for the future one, perhaps what we'll do is we'll create the top account for revenue, and this way we can show it. Yeah, we'll do it for the next one. All right, so what we have here again is we have payroll tags and sales. I'm not going to go into too much detail, so let me just skip this because we have quite a few, but I will kind of highlight, right, what's going on with debits and credits. This total right here, right, it's a debit to account 11,000. Let me leave it right here, 11,000. So this amount right here, and then these amounts are credits, right, one to our revenue accounts that are distributed. Right, and it depends on the map of the allocation as we set it up. So in this specific case, well, let me do one more. All right, so again, 2,340, here it is, right? And then we have payroll services, right? So that's 46. I'll do one more. So that's payroll. So again, if we just had one type of income account, it would have been simpler. And again, we will run a simple simulation going forward, but we decided to do like really complex one to show the magnitude of what is doable. And then again, sales and use tax is our accounting services income. All right, so that's our 68250. All right, it's in balance. Debits and credits are in balance, as you can see it here. And again, these amounts, right? So 682 and 50. And you guys asked me a lot of questions on, how does this module in QuickBooks work with debits and credits? Well, here we are. 682 and 50. That's a credit to account 41,000, right? 1,657 and 50, right? That's a credit to account 46,800. You don't see it here, but there is a mapping that we set up, right, for its job. And there's plenty of YouTube videos that show that. If you still don't know after they showed it to you, ask me, I'll be able to help you. But what's important here, my really emphasis is on debits and credits. And then this amount, as I showed, again, remember, that's debit to account 11,000. None of these accounts, right? None of these accounts are depicted here, yet they're here. All right, so here it is. Let's keep going. So what I'll do is I'll do this. So let's save a new. All right, here's our new one. And what I'll do is I'll just leave this. I'll clear it up. I don't want to do distribution necessarily, but we have these are our income accounts, and again we have chart of accounts when we have our book on Amazon, and it's free if you have unlimited. You can see all those charts of account, but let me just 4160. So these are all our revenue accounts. These are our revenue accounts. This is our accounts receivables. So as we bill customers, this will go up and this will go up. These go up when credited. So what I'll do is, it's gonna do the amounts there. So what we'll do is, we'll just do this. All right, let's do it. All right. All right. The key is that they equal to each other. All right. So the next one is, yep, that matches. Okay, let's just adjust our invoice number to match our records here. Again, remember this amount right here, it's a debit to account 11,000. These amounts right here, they're distributed right between, in this case, our sales, our accounting, and our payroll type revenue. But it's all, these amounts are credits to our revenue accounts. Oops, gotta unclick this for it to recognize. Next one. And again, it's very easy to do now that we have it entered in time cards, right? That's the cool part. So what's going on? Oh, food and snacks don't have any. We have to go packs here. They are. So yep, everything matches. Again, this amount is a debit to account 11,000, and these amounts are credit to our revenue account. 40,000 series. All right, so here it is. Everything is correct. Terms, we can set terms so that next month it's easier. Oh. Another one, food traders. Yep, that matches. Uncheck this. Again, it's very easy. That's the benefit of entering that information, right? And having it in QuickBooks. And then as you will see in some other platforms, that's simply not an option. Again, this amount right here is a debit to our accounts receivables, just like before. Save and new. Let's keep going. See, they're all here. All right. So far, so good. Looks good. We're not going to email it later. So again, 2,708 and 75 cents. That is a debit to our accounts receivables, and then these are distributed among our revenue accounts. And again, as we showed earlier in this, how to allocate it, and there's a mapping that we have. We can share it with you. We will share it in the book that will be released as well. There's another one. They're all coming up. You don't need to enter. That's why, the cool part of entering it before. You can see that sometimes it's not as easy. It's easier to key it in. But again, 2,193.75 is a debit to our accounts receivables, and then these amounts are distributed and they equal to that as well. In some, they're distributed between our revenue accounts, and then again, reminder, accounts receivables go up when debited because they're assets, and revenue go up when credited. Oops, again. Yep, that matches. Again, this is debit to our accounts receivable, and this one is easy, right? That's to our payroll services, and that's the credit to our payroll services account revenue. Revenue goes up when credited, accounts receivable goes up when debited. All right, we're not going to email it later because we want to recognize it right away. Let's set this. Here we go. All right, all right. Again, same thing. Practice makes it perfect. $3,000, 22 cent, 22, $3,022.50. That is a debit to our accounts receivable, and then these amounts are distributed between our revenue accounts. Let's see. Everything is correct. All right, have another one. Nine. Nine. Again, 1,950 is a debit to our accounts receivable, and then 390 and 1,560, those are credits to our revenue accounts. And again, in simulation for March, I'll roll everything up and kind of we'll just use one revenue account to which it all rolls out for illustrative purposes to make it easier. Oh, again, gotta change that in the settings. All right. How many more, right? We have quite a few. Again, we made an effort to make this a very realistic simulation for many purposes, but again, one of those is to show that it's quite a bit of work to process it different ways, and depends on how you process it, becomes time consuming. Again, $1,462.50 is a debit to accounts receivable, and then this would be credits to our payroll services. Again, since it's just one, right? Our payroll service income is 4680 right here, so we can show you that. Right? Here it is. So these amounts, the credits to 46,800. 46,800 is our payroll services income, and then it's debit to our accounts receivables, right? Which is 11,000. Saving you. Oops, again. Yep. As some of you know, as we start these simulations, it takes time to get rolling, iron everything out before it's smooth sailing. What's next? Let's pick up speed, keep it clean, select, and payroll tags. This is payroll tax. This is easy, right? We can probably do this one also. 755. There it is, right? Debits and credits are in balance. Again, what's important is behind this interface, you don't know what's being debited, what's credited. Well, now you do. But there are debits and credits, and people ask me, well, I didn't debit or credit anything. Yeah, you did. Okay. So this amount right here became a debit to your accounts receivable, 11,000, and a credit to the combination of this became credits to 46,800, right? Payroll services income, right? Saving you. Oops, again, right? What's next? Yep, 4,300. See. Here we have a bit of combination, right? So again, let's just show what's being debited, what's credited. The bottom line is they equal each other. So let's get to this a little bit faster. All right, save a new. Oh shoot, I forgot to set the terms. I mean, we'll catch it later too. Yep. All right, yeah. Okay, again. Yeah, how many invoice numbers I didn't correct, which is again, an argument for maybe not use a convention that is here, but you can stick with QuickBooks convention. That's fine as long as it's unique, right? But in this one, we'll try and stick to this. Okay, good to go. Right on this one is easy. We can demonstrate again. This is just payroll. See, it picks it up from the time card. Isn't that awesome? But at that point, again, remember, it's not a debited credit yet. Not yet. See, when we entered it, it wasn't a debited credit to anything. But it was there, stored for us to use. Now, we're turning it into a debit and credit, right? So, what's being debited, what's being credited? Let's take a look again. A little refresher. 46,800 is our payroll services income. And again, you don't see not 46,800 on this interface, neither do you see 11,000. But it's there, they're there. And they're being impacted with this interface. So again, something for you to know and remember when you do bookkeeping, there's always debits and credits. They have to be impacted if you're making an accounting entry. All right, let's keep going. Nine A, 92, okay. Um, yeah, sometimes the logic is different for different billings. So again, invoice number tells people something. But again, from previous examples, again, let's remove this because there's a mixture. What we do know is 2,525 is a debit to our accounts receivable, and then these amounts right here, not the rates, but the totals, are credits to our revenue accounts. Right? Yep. All right. 91. Here it is. Voila, 2,730. Right, that's going to hit our accounts receivables. And then this is, well, let's do it just again. All right, and then our accounting services income right here. That's for sales and use tax services. Here it is, right? Debits and credits are in balance, right here. And again, these amounts right here, these two, as you saw, that's the payroll. They add up to 2,190, 2,193 and 75. Those are credits to account 46,800 through mapping associated with these items. Again, that's part of the setup. And then 41,000 is credited for 536. That's the sum of our sales tax. Again, that's the mapping. We map it to 41,000 account. Both the revenue go up when credited, and then all of this goes to accounts receivables, right? So right now, accounts receivable is an asset. It's not cash, but we will gradually convert it into cash as we deposit it, right? Anyway, debits and credits are in balance. Let's go ahead and book it. Save and new. Any more? I'm sure it's coming. Right? Um, this one is easy. Payroll tax services we can show, and just for kicks and giggles. So let's go ahead and do that one, the easy ones, and then again, like I said, we will roll up simulation. We will have one revenue account to which we will roll up all those, and then we'll kind of show it forward. But in this case, payroll being impacted, our payroll services income, nothing. So again, let's just look at it. There it is. Debits and credits are in balance. This amount right here, it's a debit to account 11,000. This amount right here is a credit to account 46,800. This one isn't easy, right? Because there's just one line item. Very good demonstration. Let's book it and keep going. Again, what's cool is that there is no debit. You don't see the debits and credits behind this interface unless we mention them. But very important to understand. Very important. And what's being impacted is the way you set it up. There's plenty of videos. There's a lot of knowledgeable people on YouTube that show how to set it up. If you still don't know after you've watched their video, contact me and I will be happy to assist. But I think there's plenty of resources on that. For us, what's important is to show you the debits and credits behind it. All right, and again, revenue accounts are being impacted. You will have obviously other revenue accounts depending on how you set up your GL. Payroll tags. Easy pause. Yep. I'm sure busy. And, mm, let's see. All right, debits and credits. Try it again. You don't see them on interface, but on this one it's easy to show it, so I'm gonna show it to you. Let's see, debits and credits are in balance. This amount right here, it's a debit. It's a debit to account 11,000. That's our accounts receivables. And this amount right here, it's a credit to our account 46,800. That's our payroll services income. Right? Revenue goes up when credited. Assets go up when debited. Accounts receivable is an asset account. So, let's see this one again. On this one, it's easy to demonstrate, so we can kind of use this as an opportunity. All right. All right. So again, this is what's going on. This is we're billing for our payroll activities. Right. So again, 46,800 goes up when credited because it's our revenue payroll services income, our revenue from payroll services, and then accounts receivable goes up when it's debited because it's an asset, right? So 11,000 goes up when debited. Okay, saving you. I'll check that. Again, another payroll one. Those are good to demonstrate because they're easy. And drone area. All right, here it is. So there it is, right? There it is. Debits and credits. There they are. All right, debits and credits are in balance. This amount is a debit to 11,000. This amount is a credit to 46,800. Same thing here. Glamour Cosmetics. We're doing payroll. All right. There it is. Debits and credits. There they are. Debits and credits are in balance. These are the debits and credits behind the interface. This is debit to 11,000. This is credit to 46,800. Same thing here, doing payroll returns for them, 10-1. Alright, again, debits and credits are right here. On this one, we got lucky, so it's easy to show me. Here it is, debits and credits are in balance, right? This is debit to 11,000, this is credit to 46,800. Here we have a little bit of more distribution, so we'll just go back to show what's being affected. The distribution here. And then again, like I said, on March, we will simplify it a little bit, so it's going to be a little bit easier. See how cool it is? We entered that when we entered that, didn't affect debits and credits, but now it is. So there was a purpose for us to spend time entering that. Okay, here it is. This is our debit, these are our credits. Again, another payroll tags, probably we already spent enough time, right, showing it, so we'll save it. Select all. Here it is, all good here. Ta-da, right, debit, credit. Oh, I will adjust that too. Right. I'm sure we're coming towards the end of processing that, but again, what it shows the benefits of how fast you can actually do it once you process the time cards, right? That's the cool part. And then again, in the future videos, we'll plan to show some integrations, which is pretty cool too. Anyway, here it is. That's our invoice. Debits and credits, right? This is our debit. This is our credit. Saving you. Alright, and it pulls it. That's the cool part. Alright, where is that? By connection. Team. Here it is. Select all. Okay. Uh-huh. There it is. Voila, right? This is our debit. These are our credits. Right? Another one? 10? Wow, there's quite a few, right? This is our debit, this is our credit, right? What is a debit? Accounts receivable. What is this credit? Our revenue account. In this case, it's our payroll services 46,800. Right? Quite a few, right? You definitely get to see that. Alright, payroll, another payroll, claim homes. This is like the real deal, right? You practice this, you'll know how to do it for accounting firm. All right, here it is, debit, credits. Let's see if we can do this way. 91017. Yep. And again, we can also demonstrate that you can do it pretty fast in QuickBooks if you really want to. So again, debits, credits. There it is. Saving. Way to look it up. Right. Debit, credit, right? Remember by now. Here it is. All right. Debit, credit. Last one. Haha, we made it to the end. Alright, which one is this one? It's Maran Consulting. Alright, again, we're doing payroll for them. On this last one, let's just for kicks and giggles to show debits and credits to kind of finalize it. What's being debited, what's being credited, even though we don't see it here. We know accounts receivable goes up, it's a debit, right? That's our debit. What's credited? Our payroll services income, right? Here it is. We can clean this out, not to confuse you. Now that we're done with booking our revenue, debits and credits are in balance. This amount right here is a debit to account 11,000. This amount right here is a credit to account 46,800, even though neither of these two accounts are shown here, but they're there. Awesome. All right, we're done with making invoices to our clients. We didn't mark print later, we didn't mark email later, so we assume they already sent out to our clients. They received them. That's why AR is in accounts receivable is impact. Cool. All right, save and close. Yeah, here it is, and you can see that we have quite a bit of accounts receivable impact now. All right, if we actually go and we filter in our accounts receivables, you can see that we booked $86,000 worth of it, so that's quite a bit. Anyway, now we have to just collect it all, right? And that's what we'll do next. So please stay tuned. We're gonna collect this money from our clients.